All right, guys, welcome to second day of scalping the ES with Polarity ATI using a live funded account with Tick Trader. So Tick Trader is one of those prop firms that you could pass the evaluation, but the difference between Tick and the others is that you could pass the evaluation in just one single trading day. There's no minimum trading days that you need, and there's no consistency rule required. So I passed the Tick trading combine in one single day on Wednesday using the Polarity ATI, and then now we are on day 2 of the live funded account. So today was similar settings, 75 minimum volume, 0.35 ratio, and we went for 4 wins and 1 loss. So let's go over the trades. All right, so really quickly here, off the open, a couple minutes into the open, obviously this trades are sped up very quickly, a loss. I mean, as you guys could see, the range bound market here at the open, right before open. So I was like expecting another bounce, maybe a trap here. And I armed it to the long side. And unfortunately, the market continued lower and stopped me out really, really quickly. That was a very fast trade. And now I knew that the market is kind of trending down and it's going with the overall big trend. So the second trade that I'm looking for is a short. So now that we had a few candles on the move down, we dropped a little bit over 12 points now, 15 points. We're looking for a bounce to go short. So let's get into that. All right, so it took a while to get that bounce. You guys could see we're down now 20 points from the highs. And here we go. We got the stacked imbalances and we get entered into a short trade. So I was armed this whole time for the last couple of minutes. And finally, we get triggered into the trade. And this one is pretty much stress-free, taking the trade into a pullback. And I like that the target is above the previous low. So if it wants to double bottom, we will be still out of the trade. So this is a pretty straightforward trade, pretty stress-free as well. Not all of them are stress-free, but this one was pretty much right away a winner. So we are 1 for 1 on the day, 10 minutes into the market. All right, so now the market bounced. It's changing direction. So now we are going to look for a long trade eventually. So far right now, we are still looking for a short trade, but once the market continues to go a little higher, we would change our mind and go to the long side. So there's no trigger here. It would have been nice, but we didn't get triggered here. So now that it pulled back, now I take the arm long off. Again, arming long with regression will give me a short trade, right? So now we had a pullback, so I don't want to get in here. This is too much of a middle ground. All right, so it took a very long time, almost 20 minutes since the last trade, and finally we get that big pull up to the upside, and then we have a small pullback with some imbalances, and we get filled into the long trade. And the difference between arming it long with the trend versus arming it short with regression, which is still the same type of trade, the signals are different. So you guys could see I got filled a little bit lower versus we have a signal here to go long, but the fill would have been a couple points higher. So it's a big difference. In this case, it would have worked out because the market is strong. But again, all of these trades are discretionary and different things could work at different times. I don't have a black and white explanation why I'm doing things I am doing. I'm looking at tick chart, so 3000 tick chart, and on a 15-minute and 1 hourly chart as well to find the channels, support, resistance, and different things based on my skill from previous years of trading. All right, it doesn't take long to get in another trade. So a couple minutes later, another pullback. So we are looking to go long as well. So shorts are probably piling in, trying to enter into the trade short, and I'm looking for a trap just like that. We have a little bit of a trap here, and see how it bounces pretty quickly. So this is one of my favorite setups. This is what I was looking for on the first trade. But on the first trade, I didn't know exactly what the market wanted to do. Versus here, I already know that the market is bouncing and it wants to go to the higher day. So the higher day was much higher than this. So this was still in the middle ground. So I knew where the market wanted to go, or at least where I thought it would go, and actually end up going there. And this was a nice win right there. I did have the button, the mouse cursor on the close button, because it was taking a little bit longer. This is sped up. but it's very important to just not get in the way of the trades, and you guys will see why on the next trade. But we are up $800 in a day, only half hour in, and now we are up 3 wins to 1 loss, and it's a pretty good feeling. All right, so the market went to the higher day, then we reversed, and now it's back to the lows. So now we are back to the lows, and I'm looking for a bounce. So this is the trade I was not sure about. This is 2 hours later already, so I already called it a day. I said I'm done. I went away from my desk. I wasn't around for the big pullback. Maybe I would have taken a trade here and there, but I wasn't around for a while. I got some things ready for work. And here I was like, you know what? Let me go for it. So I'm like, if I take the trade, I get stopped out, I'll be done for the day, same as I did yesterday, which would have been unfortunate because being up $800 on the day, 2 days in a row, and then ending up with just $400 is kind of frustrating because we have to grow a cushion on this account to kind of be able to grow and scale up, you know? So this trade was a little bit sketchy, to be honest, but look at the delta, right? So I don't use the delta a lot, but you guys could see here, like we had a huge divergence. I mean, 2,300 contracts to the short side, and the candle closed green. That means there was a lot of absorption, right? There was a lot of absorption there. So I was like feeling really good. Now we could trap, so we could retest this low, and then we could trap. So this is why I did this trade in the first place, just based on the deltas. I wasn't going to trade, and obviously there was a lot of support here as well. And then you guys could see the more imbalances there. So this would have been a little bit better of an entry, a little bit lower. This is not terrible, but there's a bigger volatility today, end of the quarter, end of the month, so end of Friday. So the volatility was pretty high all day. Like a lot of times around noon, I mean, the volatility is very choppy. And today we had pretty clean moves. So this trade was, whippy, and I just didn't feel good about it because I was thinking about the fact that if I lose on this trade, I am going to be up only $800 minus commissions instead of being up $1,600. And this is the most difficult thing about trading. I know it sounds silly, but in my case, giving up profits is what leads me to over trading and bad patience on the next trade. So I am going to stick with the idea that well, let's talk about this trade first because it's about to be over. So you guys could see that it bounced, and now I'm like, all right, let me just move my profit and let me just get out for a small profit here. And I ended up making almost $200 on this trade. And making $200 on this trade is not a big deal. But the problem is that, and I'm sorry, I'm distracted. I'm watching the Yankee game here and just hit a home run. But the thing is, I did it yesterday 4 times, and on Wednesday I did it as well. I got in the way of a trade that ended up being a winner. So let's go back to this last trade because very good example of how you could prevent winners from being winners, but you will usually never prevent losers from being losers. And why is that? Because when losers happen, for some reason, they happen quickly. Like you guys saw in the first trade, I was in and out, like just completely wrong on the trade, and I lost, right? Versus on this one, I mean, it came to, I believe it came to 2 ticks away from stopping me out. So if I lost on this trade, I would have fully lost. So why am I bringing down my profit and my potential of a win way lower? Like now I skew the risk to reward. Of course, this trade ends up winning a couple minutes later, fully, it would have hit the 52, whatever target was, and I would have been up 1,200 on the day. So this is something I have to keep in mind every time when I get into a trade that, it's all about statistics and just stay in the trade, let it work out. And my rules are going to be, like I mentioned yesterday, because this is my most difficult thing to overcome. When I am up 2 wins on the day, so 2R on the day, I am only allowed to lose 1R. I will have to finish the day up 1R. So if I am up 200, I mean, I'm trading 2 contracts, so it's usually gonna be 1R is gonna be $400. So I am up 800 and I lose on the next trade, I am up 400. I'm gonna call it a day, no matter what happens. And it's going to be frustrating at times, but also I have to keep pushing on the good days. So like when the day is trading really well and there's a lot of trends, and then, you know, there's not a lot of fake outs, maybe then I could keep pushing. And then what Connor does is, I talked to Connor a couple of times over the last couple of days, and it's really cool. What I like to do is just reverse engineer what they do. So when they post videos with no commentary like they did today, it's all because we were asking for it, right? All the members in our Discord and everyone that's commenting on their YouTube, they just want more content. And what happens when you see content is you're able to kind of reverse engineer what they're doing over and over again. Because when they're explaining it, it might be confusing, and then not seeing the repetition is different than seeing the repetition. Even though without a commentary, once you actually understand what the system is and what you're looking for, you could kind of find yourself a little mold. And, you know, because for me, it's going to be hard to explain to people what I'm doing, what I'm looking for, and why I'm arming this way, because it's discretionary, you know. So again, Polarity ATI, I will make a updated review because I know I slaughtered it pretty bad. And I mean, that's how it was. I've said it in my videos. If I just did the opposite of Polarity ATI, I would probably be better off. And this is what we're doing now. We're using the regression, which is the reversed signal. So instead of going long, we'll go short on the same signal that we used to go long on, you know. And there is going to be ways to use both the regression and the trend. Today would have worked both ways because there was a lot of follow through on the market. But on those choppy days, I think the regression is going to be a lot better. But um, but yeah, what I was mentioning is like it's not going to be black and white. It's always going to be a discretionary system, and the strategy is something that you will have to come up with on your own. At least um, the real small details. Overall idea of the strategy, obviously we all get, but you know, just going through it and being up 20 wins to 3 losses over the last 3 days is very encouraging. Although I did have some success in the past on the regular account, on the on the regular Polarity ATI. However, in those trades, I wasn't really sure what I was doing. I was just arming it, and I guess I won, and I thought it was going to be much easier than it really was when I funded the real account. When I funded the real account, I mean, I went on a 12 or 13 losing streak, you know, which was very, very bizarre, but now I understand why. And I guess, you know, it's part of the learning process and stuff. But at the end of the day, it's not going to be a holy grail system. So when you do purchase it, you'll still have to kind of do your own homework and keep practicing and getting better at it. And there's no better way to do it than doing it on a trading combine. So funding a real account is a tough idea because if you lose big. And if you do on sim, for some reason on sim everything's easier. There's no emotions. You're not gonna pay attention to everything, and it's just going to be much more difficult. In the beginning, I think you should do it on sim, but then later on, do a combine, whether it's with Tick Tick or if you wait for a sale with other combines. Definitely do it that way. At least you have some skin in the game, and you are actually going to pay attention a lot more to all the details. And now I'm just rambling. The video is already 13 minutes long. It was supposed to be under 9 minutes. So yeah. Peace out, everyone. Have a good weekend, and I'll talk to you guys on Monday.